Okay, hello YouTube. Today is the 22nd, so I did not make a video for Monday the 21st because I did have a family emergency. So I'm going to attempt my best to give you guys an update about the trades that I was in. So let's go ahead and take a look. Uh, let's see. Let's go ahead and start with. Let's go ahead and start with October 18. Okay. All right, so, actually, it's good that we're starting here because at the very bottom here, because I actually did not mention this trade in the previous video. So, welcome to Trade Journal episode 5. So, this is kind of be an overlap of Friday's trades that were missed and the entries I had on Friday that I did talk about, and then the trades on Monday, and then the trades for today. So, it's kind of going to be um, 3 to 4 different types of trades. So go ahead and just sit tight and just bear with me here, okay? So I ended up buying 2 SPY puts, December 20th expiration 583, striking price, 2 contracts for a total premium of $2,364. I bought this at 8:47 a.m. I did not like um, where price was going. So I did mention that I did see an ascending triangle. So as you can see, the ascending triangle did fail. So I believe it was on the 4-hour chart. So let me go ahead and pull that up. So if we look before, before yesterday, actually before Monday. So on Friday, this is what I saw, right? So so I had an ascending triangle here. I had it drawn out, so let's just go ahead and do that real quick. I do apologize if all the numbers overlapping are a little hard to read, but that's just the way I'm doing my levels at the moment. Okay, so this was the ascending triangle here that I had put in. I entered a call, I believe it was. So I sold these contracts down here. I sold or closed the puts, and I bought one SPY call for 14.98. And actually, price in the morning, right around here at the highest point, the highest point um, was actually profit for me, not because of the long call, but because I sold a short call, or I shorted a call of the same striking price for that day expiration. But price had the price of the stock didn't move much, but theta decay really works in my favor. So as you can see, I sold the contract for 43 and I bought it back for 10 cents. At one point, it was not this much profit. This is $43 profit. It's not this much profit. But this was the short call was up more than the long call was. So um, I wanted to take profit. I didn't take profit because I want to stick to my take profit stop loss levels. I don't want to just take profit willy-nilly. I need to have a strategy to it so that way when I do win, I'm in a winning trade for longer and I'm not taking profits too soon. So those are the trades. You can see price ended up coming down. I actually, unfortunately, did sell near the bottom on the long call here. In retrospect, I do think I could have held on to the risk a little longer, but price just went almost straight down. Yeah, so it was kind of hard for me to gauge where to buy because you can see there's increasing volume on this candle, on a lot of these candles actually, a lot of increase, like buying volume on a lot of these candles, so I didn't know where the bottom was gonna be. My confidence level wasn't too high. I just sold, and also because price did go way under my my stop loss level, which was I think 581.66. I believe that was my stop loss level, so it went way below that. I even told myself like this is not right. I didn't stick to my rules here, where I was supposed to hold on to the contracts unless there was a close above or below my stop loss level on the 15-minute chart and oh, actually never mind. There was a 15-minute. There was a close on the 15-minute chart under 580, like way under 582. Let's see. Yeah. Okay. All right. So I guess I did stick to my strategy. But me being aware of it, I guess I got not being aware of it. I mean, and being aware of it now means that I didn't stick to my strategy based on awareness. It was kind of luck, so that's not good. We don't want that. So let's go ahead and continue moving on to the next trades. So I entered a SPY put credit spread for $12 credit, and collateral is $100. So striking prices are 579, 578. So I sold the 579. I bought the 578. This expires tomorrow, I believe. Where would I see that? Right here. Oh, not tomorrow. This expires in 2 days. And today's Tuesday, so this will expire Thursday. Okay. Oh, about credit spreads and short calls and all that. So I don't know if I mentioned this, but anytime the premium has dropped a lot, I don't take profit just because prices came down a lot. I tend to take profit once price is not price, when delta is 0.10 or lower. When delta is 0.10 or lower, that's when I start considering taking profits. If it's higher than 0.10, 0.11, like let's just say 0.11, and it stays at 0.11 and then it reverses, I'm okay with that. My rules are that at 0.10 or lower is when I will sell or buy to close my short contracts. Okay, so SPY credit spreads is a little different because it's not a naked short contract. It's a married contract, so married with a long cost or a long contract. So for those, I always just let them expire. For the most part, like almost always let them expire, completely worthless. Sometimes like let's say for instance on this one, I'll once it's like at 15%, so whatever 15% of 12 is, we could do more like 20%. What's 20% of 12? 2, 4, 6, 8. I don't think is there an even? There's no even number there, right? Let's just say this: if this contract, if I can buy to close this contract, and just say overall my cost basis is like $3, then I'll go ahead and close. I'll buy to close the options contract that's short, and I'll leave the long call just in case there is any possibility of a reversal. Okay, somewhat arbitrary, but not completely. Now let's go ahead and move on to the contracts that I'm in right now. So I am in a 588 call again, and the expiration is December 31st. So I bought this at 12:06 p.m. So let's go ahead and take a look at the chart. So at 12:06 p.m. today was near here somewhere, I believe it was. So let's go ahead and look at the 1 minute. And let's go over why I entered this. So I said 12:03, 12:06. So 12:06, so I entered on this candle, somewhere around this candle. So I saw price hit the 582.89 level. The 582.89 level was I believe 582 level. How did I get this level again? 582.89. Saw increased volume. So I took the long call. Um, took the long call, and also I saw that price on the daily chart bounced off the 10-period moving average, and it held. It looked like it was going to hold, so that's why I went ahead and I took that. A better entry would have been the 50 or even the 38, because I entered some fib levels from the low of the entire move. I wouldn't say this is an impulsive move because there is a lot of like up and down price action. You can see here if we zoom in. Right, so there's some pretty good up and down price action, but um, I wouldn't say, like, to me the price action didn't feel slow at all. So that's why I went ahead and I just took the whole move, because it felt like it was consistently uptrending. So yeah, 23.6 or the 38.2 would have been better levels for me to have taken. But I'm in this trade now. I really liked. Oh, excuse me. I really liked that price bounced off the 10-period moving average and held on the daily chart. So this is like my conviction for why I'm in the trade. Now, what I wanted to do, and what I was thinking of doing was price did come up, and I could have taken some profit. I was up like maybe $40. Can we take a look? Actually, I think we can. Yeah, almost $40, $38.89. So I wanted to take profits by selling a call, right? So I have a 592 call right here that you can see. Now, this call, I bought it right before market close. So if we take a look, it should say like 12:58, 12:59. Oh, 1 p.m. actually. So I bought it at market close. So you can, on Robinhood, I don't know if you know this, but you can trade SPY options up to like 1:14 or 1:15 p.m. Pacific Standard Time. So I bought this at market close. The reason why I bought this is I increased my risk, right, by a little bit, but I increased my risk by a little bit, but I increased my potential for profit a lot more. So I leveraged it a lot more. So this doesn't expire for 6 days. Let's see, expiration 10/28. Yeah, and today's the 22nd. So this doesn't expire for 6 days. The delta here is 8. So I'm giving myself increased potential for reward here. What I would like to see is price continue up until this delta is at 20, and once this delta is at 20, I will consider if it's a good idea to sell this, sell to close this contract, or I can hold on to it, and because it only cost me $24 premium, I would sell a shorter term expiration contract that is 20 delta, that it will be lower than the 592 striking price, somewhere between 588 592. That will pull in profits and reduce my cost basis. So at the worst case scenario, I'd be selling a call contract for a 20 delta with a premium of 0.24. Best case scenario, something much higher than that, and I take profits, and I'm still in this trade. So that is my recap for where I'm standing at right now for my options contracts and my road to 1 million. Yeah, so thanks for watching. Appreciate it.